A big hello to everybody joining us from around the world. My name is Marek Razuk, and I'm the lead financial researcher at Reuters Events. It's my absolute pleasure to welcome Datayes CEO and founder, Dr. Jim Wang, for an exclusive interview with us here today. Hi, Jim. Dr. Jim Wang has more than 20 years of experience in asset management, cutting-edge investment platform development, and big data research. He's also a pioneer in the application of the internet, cloud computing, big data, and artificial intelligence in investments. Prior to founding Datayes, Dr. Wang has served as a research associate at Harvard University, as a manager of professional services and internet systems at Bloomberg, as a senior portfolio manager and research officer of scientific active equity at Barclays Global Investors, which is now BlackRock, and as general manager of the equity department and as chief investment officer of quantitative investment at Bossera Asset Management Co. So I've got a few questions here today, and I'm very excited, Dr. Wang, to hear all about what you've been up to at Datayes and how your 2021 is shaping up. Certainly, you have a very impressive list of past experiences. Could you share your thoughts on why you decided to become an entrepreneur instead of carrying on with a sort of safe and stable life that you had with all those senior positions that we mentioned? What were your aspirations and goals in founding Datayes?
Good morning, Mark. Thanks for the opportunity to talk with you about my experience. I have my background in physics, but I always enjoy technology and applying technology to solve the actual problems. And in 2012, I noticed that Watson is able to compete with our human contestant at the Jeopardy. So I think this kind of technology can be applied to investment, because many of the investors, in particular the retail investors, they don't have the professional knowledge and the capability to generate a stable return for their investment. So I hope that we can build a platform that we can integrate the data, the investment knowledge, and the technology to build a new platform that can provide a professional service to retail investors to help them to generate a professional investor's return.
As a veteran with more than 20 years of experience in investment management, could you share your view on the industry trend and what issues you see existing currently?
Firstly, I think in China, we still have a lot of retail investors. They are a lot of making money from the stock investments. So we needed to help them to become a relatively more professional. So we needed to use the technology to improve their investment capability. One of the big trends right now is to build a robo-advisor platform to help them. And this is a good time, actually, not only in the investment trend. There are more and more retail investors are converting to professional service. And the technology also is at a big change area from the information era to digital era. And the AI technology in particular has a broader application in investments. And there are a lot of robo-advisor service available now, but we needed to deepen the service with more technologies like big data, machine learning, and even probably blockchain technology as well.
Thank you. Thank you. Um, and as an expert in quantitative investment, could you comment on the recent developments in this field? And specifically how this investment approach can address the issues you mentioned earlier?
The quantitative investment started in 1970s as people introduced computer into the investments. And there are a lot of good companies like BlackRock, Vanguard, founded during 1970s. They have bring a lot of innovative products like index fund, quant funds to our investors. Right now, we are actually at a stage of digital era, and we are facing a lot of data, not only the variety, the volume, and also the changing frequency as well. So we needed to have some kind of tool to help us to source the data, to extract the information from a lot of unstructured data like text and images. And also, it's hard for us to build the model for so many data sets. And we needed to have some kind of like automated or intelligent data modeling scheme. And also, human beings have accumulated a lot of investment knowledge. In particular, our fundamental analysts have a very refined research logic. We needed to incorporate those into our quantitative investments. So that's basically needed to have some kind of new framework to solve this problem, to build a new platform or using a new approach to improve quantitative investment. By defining human domain expertise in knowledge graph, Datayes brings quantitative machine learning process to fundamental valuation. Knowledge graph brings structure to unstructured data, links context, and the raw data, and give us the benefits from advantages of both fundamental and quantitative approach. The new approach can easily increase the coverage of stocks with refined and in-depth research. It allows the quantitative investors to utilize the fragmented small alternative data sets for an industry or company. And finally, it offers a framework for investors to monitor the changes of drivers associated with the industry and the companies via their research frameworks.
You know, I've been sort of reading about you and watching some of your previous interviews, and I see that you've compared Datayes' service to a navigation system. Um, could you elaborate more on what you mean by navigation system for investment? What do you mean?
Sure. The analogy here is that traditional data terminals are like maps. The data is static, and it requires a human to interpret the data, make a decision, and react to any change that might arise. On the other hand, Datayes is a next generation investment platform, and it is analogous to a navigation system. It helps users navigate and select the most relevant data, such as driving factors in a valuation, and performs the time-consuming data interpretation and monitoring tasks, allowing humans to focus on decision-making process, just like a navigation to the driving process. We believe this can bring investment management industry to a new area of smart investment navigation. We believe our AI revenue forecast will become the industry standard by which analyst performance will be benchmarked against.
That is absolutely fascinating. So, is there a case study you can tell us about?
Yes, we have a large, we have a client that is a large sovereign wealth fund, and they have a lot of portfolio companies needed to track. So what they need is to build a system to track all the information associated with this holding companies. And what we did is to build the platform using our Quantamental Investment approach, and including the sourcing the data from different places, and build up the navigation system to track all the changes. And whenever there's a change, we notify the change to their relevant users. So this system basically helps them to reduce a lot of time traditionally conducted by human researchers and the portfolio managers. In addition, a global consulting firm evaluated us as the only firm that provides AI system linking domain expertise with machine learning and able to integrate fundamental research with quantitative big data processing.
So, how can investors from different backgrounds leverage the innovations of quantamental investment to achieve alpha?
Quantamental investment can benefit both fundamental and quantitative investors. On one hand, it allows fundamental investors to make in-depth analysis and evaluation of individual stocks that is more objective and accurate than traditional fundamental approach. It retains human knowledge while removing subjective options, making investment decisions justifiable. On the other hand, quantitative investors can use the revenue-focused time series as a signal input into the quantitative trading strategies.
Well, that's really interesting because, much like yourself, I imagine from going through your CV, I've worked at a trading desk and spent a lot of time with analysis from real seasoned analysts. I guess how well does your product do compared to analyst consensus? And I'm wondering specifically in terms of forecasting.
Okay, that's a good question. We did have done a lot of comparison. So we have compared the forecast errors of both Datayes forecast and the analyst consensus to actual revenue and the profits of all companies in the China Stock Index 800 index from 2012 to 2019. And as shown previously during our presentation in the conference, I think a week ago, Datayes forecast outperforms the analysis consistently. In addition, we have also constructed a forward value signal that is the ratio of forecasted earnings to the stock price with the universe of a CSI 800 and the time windows of past 5 years. Using a unit and alpha signal analysis, we observed that Datayes achieved IR of 1.93 versus 0.87 of the traditional consensus, and the cumulative alpha return of over 28% versus 8% of the consensus. That's a big improvement from the traditional analyst consensus.
Wow, that is a true innovation, it seems. Is this AI forecast approach applicable to other international markets? What would you expect in terms of result accuracy in other markets? Would it be better or worse than the current application that you're seeing in China?
Our Quantamental approach is basically a framework. It's a tool. It's more like a pass system. The user can build their own model using this system. For example, we can build a model for China A shares. We can also build a model for the US market, Hong Kong market. As long as we have the data available, then the whole system can be functioning properly. So in fact, we already have done a lot of analysis for the Hong Kong market and the US market already. And the forecast results are pretty good. And I can give you one example to justify just mentioned. And for example, there is a company listed in Hong Kong called Meituan. And we actually give the forecast on October 31st. And the actual earning was announced on November 30th. And the number we give on October was 35.4 billion renminbi, but the actual number is exactly 35.4 billion. So it's just a decimal number, second decimal number difference. It's less than 1% difference actually.
We've spoken a lot about AI, and I know that that's something that you talk about a lot, Dr. Wang. What other areas of the investment process do you think AI could bring revolutionary improvement to?
In addition to the quantamental investment, AI is used for analyzing data that's otherwise difficult to quantify. For example, news sentiment and a research report sentiment. Take a research report sentiment, for example. Analysts actually do not change their recommendation often, right? Choosing instead to express their shifting view in words. So a strategy using the recommendation might miss this subtle signal from their reports. So using natural language processing, however, we are able to analyze the sentiment expressed in words to extract the true view of the analysts. So another application is in search. Let me share you a real case from a researcher in public fund whose requirement is to search past news event related to a given company. They used to have to spend like over 20 minutes and browse through the tens of pages of research results to find the information they need. By applying AI in the ranking process, we are able to bring up front the most relevant information and shorten the process to less than a minute. So another real case is from our public fund client. Their requirement is to quickly find the valuable information within research reports, which used to take them hours to go through the research reports manually. By applying the AI in search comprehension and the graph recognition, we were able to shorten this to a few seconds. Our clients rank us as the top search engine, call us Google in the finance domain. Because we are presenting the information not just by the match of the words, we are presenting the information by the knowledge behind it. These are just some examples of the values the AI can bring. At Datayes, we strongly believe that AI empowers investment.
That's fantastic and certainly exciting from an industry standpoint. But from a data and market analysis perspective, how can you help international investors to invest in China and enter that market?
Datayes is focused on Chinese market. We are the expert in Chinese data provider, and we also have all the investment knowledge in the domain as well. So we think we can provide good help to the foreign investors. With the China A shares being added to the international index, and there are growing demands for the research on the Chinese companies and the industries. So we think this is going to be a big area for us to provide insights for the foreign investors to invest in China. China's market is not exactly like the United States, the matured market. China is still a developing country, and the market is still at its early stage, and there are more and more new regulation and other things gonna happen and to improve this area. So we can see the asset management industry will grow like 10% each year. Right now we are at like 100 trillion level in terms of the RMB, and in a few years, and by 2030 probably we are like a 200 trillion market in asset management. So there are a lot of opportunities, and the investors actually going from the trading stocks to buying funds. That also need a lot of professional service to them as well. We believe the combination of our AI-driven framework and the rich data set can help our customers identify valuable investment opportunity in China.
Thank you. I'm sure you've got many people keen on doing just that in 2021. We've sort of come to the last question today, which I've been meaning to ask you in the lead up to this interview. Could you share with us your view on the past and future changes to investment management, and specifically how the landscape might look by 2030?
Well, as I mentioned earlier, technology will change the market dramatically, in particular the AI. As we are generating a lot of data, and we needed to have a more automated way to help us to process this information, because investing is basically a data business. We needed to handle this data in a more efficient way to improve our investment results. So I can see in the future we needed to combine the wealth management and the asset management together to build an end-to-end solution to our customers. Just like our retail business from Amazon, we have built in the whole automated process of very customized solutions to each customer. So I can imagine in 10 years, this just like Amazon in asset management. We have a big market, and everyone can have their individualized investment solution from their professional servicer.
That's fascinating, Dr. Wang. This has been a really fruitful interview. Loads to unpack here. I appreciate you taking the time. I know it's quite late in China and early here in the UK. I hope we can catch up soon, perhaps speak more in depth. And yeah, I just want to thank you again for this interview on behalf of Reuters Events. And it's been an absolute pleasure. Great chatting with you, Dr. Wang.
Okay, thank you very much for your time. And it's good to talk to you today.
That's Dr. Jim Wang, everybody, CEO of Datayes.